This is Seattle Real Estate Radio with your hosts, Christian Nossum.
Well, when you're selling, you got to know who your buyer is and you got to know how to market to them. I do.
And Dan Keller, mortgage expert with New American Funding.
Hey, rates are important, but strategy matters more than ever.
For the next hour, you'll learn impactful insider information as Christian and Dan teach about the ins and outs of Seattle's real estate market. Now, here's Christian and Dan.
Hello, and welcome to Seattle Real Estate Radio here on KKOL 1300 AM. Thank you very much for listening, whether you're in your car, in your truck, like Dan. If you are listening to us on iHeartRadio, you're watching the YouTube podcast or the video podcast. I don't know what I'm saying, apparently, Dan.
Or you're skipping out and you're in your cubicle at work.
Yes.
Listening to us
that's
while
what
you're
most
working
people,
away.
that's what I hear from a lot of our past clients.
A lot of our clients,
yeah. So thank you very much for listening. My name is Christian Nossum. I'm the founder of the awesome Nossum Group at Wilson Realty. I'm a local Seattle real estate agent.
Well, you're not just a Seattle real estate agent. This guy, if you're new to the show, Christian's been recognized by Stately, which is a pretty big name in real estate nationally, as one of their top 10 agents in America. And then recently you were recognized locally by a local news outlet as one of the top 10 Seattle real estate brokers. So, hey, congrats, man.
Yeah, thank you. And you are?
Hey, my name is Dan Keller. I am a mortgage advisor at New American Funding. I do need to let you know that my MLO number is 114349. We've got to stay in compliance.
You always got to say that.
Always.
And you're not just any old mortgage lender.
Yeah.
You are also, you're one of the top 3% in the nation. Yeah. You're kind of a leader in mortgages. Yep. This guy, he gets paid to speak at National Association meetings and all this stuff all across the country.
Let's talk the producers into paying me for speaking on the radio. Yeah,
gosh.
No, listen, that's how we've put this show together because you and I are locally in the Seattle marketplace two of the best in each of our industries. Yep. We just happened to be, start working together. It was about 5 years ago.
Yeah,
and
it's a great partnership. I love working with you.
Yep.
I hope you like working with me.
Yep.
So.
You are a real estate blogger. I'm a mortgage blogger. We put our brains together, and here is Seattle Real Estate Radio. So, that's it.
So today we're going to actually jump right in. And one thing that we want to talk about, and it's something that we're going to ask all the time, and it is, what are the 4 essential steps to getting your offer accepted in today's uber competitive real estate market?
Yeah, it's so competitive out there, Christian. And this is something I want you to understand if you're listening to this, whether you own a home or you're thinking about buying a home, this is something proprietary to you. I mean, this is what you're doing personally in your business to have success in a very, very, very competitive market right now here in Seattle. Yeah. So these are the 4 components that you... every single client, whether it's cash, whether it's financing, you're using it.
Yep. So I'm going to tell you what the 4 steps are, and then we're going to break down each one. Okay. So the first one is your mortgage budget. Whatever your monthly budget's going to be, you need to set that ahead of time. Second, reality check. You need to get a reality check on what the market's doing. I'll explain what that is in a moment, but you really got to know what's going on in the market. 3 is make yourself attractive. We're not talking making you look pretty like Dan's doing right now on camera. We're talking how to make yourself look good to a seller. Yeah. And there's definitely a lot of tips that go into that one. And 4, hiring good representation and someone that has a great reputation.
Huge.
I mean, you got to be aligning yourself with pros that will get the job done and that know what they're doing.
And now more than ever in today's market, we're seeing this more and more where listing agents are reviewing and accepting offers because of the recognition of the other agents turning in offers. So very, very, very great. Valid point.
It makes a big difference. So number 1, let's go into it a little more detail. So your budget, your mortgage budget, your financing, generally, when people want to buy, they reach out to a real estate agent first because that's the logical way to go. I want to buy a house. Let's talk to someone that sells houses. Duh, that makes sense. What I do is I say, okay, cool. Let's talk. But the first thing I'm going to have you do is figure out what you want to spend every month. Then we're going to work backwards from there, figure out what that means you can afford price-wise, purchase price-wise. And then from there, we're going to give you the reality check. So that's kind of the first thing is setting your budget up. And this is where I send them to you because you do a better job than really anyone else that I've seen in preparing them and showing them what the different options are with some of the programs and things that you use that I haven't seen any other mortgage broker use.
Well, we're high tech. You and I both are high tech, but we're also high touch. And I use Mortgage Coach. It's a mortgage software, and what it does, Christian, is it allows me to put options, up to 4 options next side by side. And what I do that for budgeting, for budgeting purposes. So, for example, a client comes to you and they say, hey, we're looking at relocating to this neighborhood, this community. And, we're looking at homes priced in the $600,000 area or in the price point. The reality of it is that home is probably going to sell potentially close to about $700,000. So what we do is I will do a $600,000 option, a $625,000, a $650,000, and a $700,000.
Yep.
And so it really gives them an idea on how to dial their budget so they know where to draw the line. And that's a conversation you have with them. And this is something
that you don't, this is where I think I separate myself. You know better than I do because you're the one that talks to a lot of real estate agents. I only talk to lenders.
Yeah.
So, I'm big on figuring out what your top budget is before we get into the emotional side of buying a house and negotiating.
Yeah.
We figure that out ahead of time so you don't get yourself into trouble long term.
Well, we talk about this a lot at our home buyer, beersandhomebuying.com. That's, every other month we'll host one near Amazon.
We actually have one coming on in 2 days, Wednesday at Quoco in South Lake Union.
Yeah.
So if anybody wants to go, we're actually almost sold out. I think we actually have 20.
They very typically do. Yeah. They sell it. But the most important thing is we talk about that. But don't get emotionally involved before you have a budget and you're able to draw the line there.
All right. So number 2 is reality check. Now, what this means and what my point here is, now that you figured out what your budget is, you know what you can afford. Let's pick out the neighborhoods that you're interested in. Once we figure that out, we're not just going to look at what houses are on the market for sale. I'm going to help you look at what just sold and what did they sell for.
That's big.
Because that's a bigger deal. Yeah. This is where you're going, okay, I can afford $700,000 like you're saying with that. Let's just go with that example. $700,000 is my max. I want to be in Green Lake. What does that mean I can actually afford? Well, don't look at homes that are for sale for $700 because they're not selling for $700. No. They're selling for way more than that. 'Cause that's how the market's working right now. It's going for $100,000+ more than what they're asking.
Yeah.
So we're looking at what did it sell for, and now we're going, okay, well, does this neighborhood still make sense for you? Because maybe this reality check is showing you I can't afford Green Lake.
Yep.
Maybe I need to expand a little bit out.
Yep. Saving time, saving energy and emotions. So the big thing is you're looking at solds versus just homes on the market. You're looking at what's sold in the last 30 to 60 days. That's huge, man.
It's a little different take than really anyone else is doing, but it helps a lot because it's really giving you that snapshot into what the market is doing.
What direction, and it's relevant. Yep.
Number 3, make yourself attractive. So again, we're not talking looks. We're talking how to make yourself attractive to a seller. And there's lots of different things you can do. If you're at all considering or talking to any friends that are buying right now, they're talking about waiving all these contingencies and doing all this stuff, and you're basically bending over backwards, doing whatever you can for a seller.
So real quickly, talk to us about contingencies, like you do in the home buyer class or workshops. So with purchase and sell contracts, legal contracts, there are contingencies. In today's market, you're needing to tighten up your contracts, meaning sometimes you have to remove contingencies.
Yeah, sometimes
Tell
we're
us
eliminating
what contingencies are involved.
So the easiest one to eliminate, and it's not that you're eliminating it, you're just doing it ahead of time. And that is a pre-inspection. So this is where you're actually removing your inspection contingency by performing an inspection before you get the offer accepted. It's a little risky because it does cost you money. And if you don't get the house, you just spent money on something that you have no use for because you don't even get to own the house. But it's worth it for a lot of people because you get to now remove that contingency from your offer. The second thing is potentially waiving your financing contingency. And this is where you and what you do, which is different than any other lender I know, and what separates us as a team from the pack when it comes to getting our offers accepted. This is where you come in big time.
Well, yeah, and most people go to a bank to get pre-approved. What I'm doing is I'm taking that to another level. You've already gathered your income documents. We've already ran your credit. We've already looked and established your budget. Let's do all the heavy lifting up front. Let's take it one more step.
Yep.
Let's package all this together and let's submit it for underwriting. So what I do is I have you pre-underwritten. You've already gone through the underwriting process. You are done at this point.
Yep.
What's left now is an appraisal, lock your rate, clear title, close.
So why this is a big deal for anyone that is a novice or not quite in this market yet, you can close this quick in like 14 days.
Yeah.
If it's a condo, you're going to be a few days out because there's extra steps, not on Dan's end, but on the actual purchasing end.
Yep.
But if you're buying a single-family house, a townhouse, something that doesn't have a homeowner association, we're closing in 14 days.
And that's pretty equivalent to closing timelines for cash offers.
That is about 2 to 4 days extra longer than cash.
That's it. Makes it attractive.
Which is super attractive to a seller. Because most buyers that are out there that are getting financing, they're 30 days, 45 days out.
Check this out, Christian. 73% of all loans that go through underwriting have issues. And sellers and listing agents know that. So by having gone through underwriting, we've eliminated that issue.
Again, so it's the separations and the preparation, just like our good friend Russell Wilson always says.
That's it.
Number 4 is representation and reputation. That is big. And again, we kind of talked about it.
Yeah.
You got to choose someone that is good and that has a good reputation in the industry.
Yeah.
You can look for people online. Look at Yelp. Look at reviews.
Yeah.
Try and figure out who you're using and are they credible?
Yeah.
And that's where, I mean, us with this show, that's what we've tried to do is show, hey, we are credible. We know what we're doing. We put ourselves out there. We show you exactly who we are. We have tons of reviews. We have tons of comments and all that
and
stuff.
Yelp doesn't lie. You can't make up a fake review on Yelp. And so, visit the agents page. Agents are doing that. And you have a phenomenal reputation in the Seattle marketplace. That helps. It plays a big role.
It does.
Having a local lender plays a big role.
You're
an agent. You have
big
listings.
Role.
You get 20 offers on a home. Are you looking at financing?
Huge.
Yeah?
Huge.
Okay.
So if there are 20 offers, if any of them are with big banks, we're talking the big 4, Wells Fargo, Chase Bank of America,
Credit
even
unions.
First Tech, BECU, they are generally being put on the bottom of my stack. Because a local lender that I can actually call and talk to or text or quickly email and get a response back, they're the ones that I want to work with because I have much more confidence in them.
Confidence and control and execution.
Exactly.
Awesome segment, man. I hope this helps. If you're listening, if you have any questions, reach out to Christian. The conversation starts with you.
Yep.
And we'll go from there.
Awesome. Well, stay tuned. We got more after the break. Seattle Real Estate Radio.
Stay tuned. There's more Seattle Real Estate Radio coming up here on Business Radio 1300 KKOL. We're back with more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hey, welcome back to Seattle Real Estate Radio on KKOL 1300 Business Radio. Hey, we are here every single Monday from 3 to 4, just a quick reminder, and on Saturdays from 5 to 6.
That's right.
Every single Monday and Saturday now.
That's right. We're on twice.
Twice a week, baby.
Simulcast. We're live Mondays, but they rebroadcast on Saturdays.
Yeah.
So.
Well, we have a phenomenal guest here. I'm excited today. I can't wait. I know you're going to manage and run with it starting out at the gate, but it's going to be great.
We got a lot to cram in, so we're going to get going. So today we have Matt Ross. He is a financial advisor and owner of the Ross Financial Incorporated, an independent firm aligned with Raymond James Financial Services, Inc., member FINRA, SIPC. It's like compliance.
Kind of like me, just compliant. Over compliant right
exactly.
here. Exactly.
Matt has been helping people make sound decisions with their investments and finances since 2005. His practice is located in the Mill Creek Town Center, and he focuses his practice in the area of retirement planning. So, Matt, thank you very much for coming on today. I appreciate you taking the time and your willingness to share all this great info with us.
Absolutely. Thanks for having me.
So can you shed some light on retirement planning for our listeners? I feel like a lot of people confuse the title of stockbroker with financial advisor, and I don't know what the difference is, so maybe you can enlighten us.
Sure. I'm happy to. You know, I think a stockbroker is kind of an older term that people use to describe somebody who, spends a lot of time picking certain stocks at certain times with really an emphasis on returns. Mm-hmm. These are individuals that seem to be more portrayed in like Hollywood movies.
Yeah, it seems like a very 80s term to me for some reason.
Sure.
Yeah.
Sure. The most recent one, The Big Short.
Yeah.
It's and so, very glamorous, I guess.
Mm-hmm.
Which I would say that what we do isn't glamorous, but our focus is more on planning.
Mm-hmm.
We meet with people and spend time understanding their goals, what they want to accomplish with their money, and putting together a plan to accomplish those goals.
Got it. Sounds pretty straightforward, not very complicated.
And professional.
Exactly.
You're not a broker. I just feel like even in my industry, mortgage broker, I just feel like broker has that dirty,
rubbing off your skin a little
kinda,
bit.
Yeah. I don't like them. You call me a mortgage broker every once in a while. I'm like, dude, I'm an advisor.
I don't know what the
mortgage
heck to call
advisor.
you.
Yeah.
I'm sorry, Dan. So, why do people, or do people really need to use a financial advisor? I mean, everything's online, it seems like. So, do you really need to use one?
Yeah, I mean, it's a fair question. And I will say, no, not everybody needs to use one.
Okay.
But just like with any profession, there's a lot of people that feel more comfortable in the hands of somebody capable that performs their specific skill day in and day out. Most people I encounter don't want to make a mistake with their retirement.
Yeah.
I don't.
Doesn't sound like fun.
No.
It's kind
But
of
you only got one shot at it, really.
Right.
I mean, so you don't want to screw it up. I mean, I certainly wouldn't want to manage mine.
Yeah.
So, what types of things do you guys help people with, or what do you help people with?
Yeah, so a little bit more detail is the fact that I review people's retirement plans at work to help make sure they're diversified and in line with their stated risk tolerance. Make sure that based on their specific situation that they're putting away enough money. I review IRAs and do the same thing regarding diversification and risk, but we also analyze what types of investments they have inside their IRAs to make sure it's the right, vehicle to get them where they want to go. Yeah. Now, most recently during tax season, we were making sure people were aware of all the rules and limitations involving IRAs and trying to work in tandem with their tax professionals to ensure that they're doing all they could for that tax year.
Making sure they follow the rules.
Yeah.
Those are kind of important. What are some of the rules that you're talking about? Give me an example.
Yeah, sure. So, for instance, a lot of people aren't aware that they've got actually until their tax filing deadline to fund these types of IRAs, which was April 18th.
Yeah, they bumped it out this year. It wasn't the 15th like always.
Right. And some IRAs have different deadlines. So, during my reviews with clients throughout the year, I try to find information about how much money they make, because that can income can affect their limitations, what they can and can't do. If they normally receive a refund or they normally have to write a check, because that can also
That's me.
well, that can give an indication as to which type of IRA makes the most sense. And, if they handle their own taxes or they have a professional, so we're very proactive when it comes to deadlines like tax day or end of year planning. So,
Got it. So I know that, Shannon and I, my wife, the producer, we're kind of looking at doing IRAs and all that stuff. And I know that there are actually contribution limits to those and with 401ks as well. Are you allowed to tell us what those are? I know that compliance, they have a lot of restrictions on what you can and can't say. And very specific on today's show.
We've got the eyes in the sky right now.
I know,
Matt's
Big Brother's watching us.
what he says.
Don't want the black helicopter to land on the roof. No.
And this is a heavily very compliant interview today, segment. So, and I know you've done your due diligence and had everything passed, but any light you can shed on that would be awesome.
Yeah, absolutely. Any person who's under the age of 50 has different rules and limitations in terms of contribution. So somebody under the age of 50 can contribute $5,500 per person per year to either a traditional or Roth IRA, and $18,000 per person per year to a 401k. If they're over the age of 50, they can do what's called a catch-up contribution. So for IRAs, that amount increases to $6,500 per person per year. And with 401ks, it's $24,000 per person per year. But those numbers are subject to change in subsequent years.
Depending on what the government decides they want to do.
Right.
Because they're the ones in charge.
That's right.
Okay, so I've heard actually people are saying that they don't like qualify to fund an IRA. I don't know what that means, but I've heard people, like when I'm sitting down with Dan sometimes and we're meeting with a buyer, we're going over stuff and we ask them if they have what they have for their retirement stuff. Sometimes they say that. What does that mean, and are they fully educated on that or no?
Well, a lot of times they'll find out after the fact that they don't qualify, and that's the part where, your original question is, does somebody really need a financial advisor? If people can keep up to speed on other rules, maybe not. But because there are so many, your question about, people not qualifying to fund these IRAs, it kind of gets into a tricky conversation because, we start getting into IRS rules. And I always make the disclosure that I don't do taxes and I don't give tax advice, but I will say this, that there are a lot of rules and restrictions surrounding IRAs because someone's income will typically determine what types of IRAs they can fund. So in a conversation with one of my clients, it may go something like this. Mr. and Mrs. Client, based on what you've told me, you may qualify to fund a Roth IRA, but make sure you bring that up in conversation with your tax professional during tax season. And here's why I say that is because the maximum income that someone can make and still fully fund, like a Roth IRA, for instance, at least for last year, was $183,000. So if their tax professional can confirm that, not to get too detailed, but their modified adjusted gross income is below $183,000, then they're fine. Otherwise, if they make more, they really wouldn't qualify. There's only a couple other scenarios where they could actually get money into a Roth.
Okay,
So.
got it. I'm going to test my knowledge. Okay. See if I'm up to speed on this because I am not a financial advisor. No. Roth IRA, that's the one where its withdrawals are not subject to taxes. Am I correct?
Correct. Yeah, you can deposit after tax dollars. Good job. And then when you make a withdrawal in retirement, you don't pay taxes on anything that gets removed from the account.
Okay. So, and you just said what those limits were, what you can contribute each year. Remind me what that was again.
Yeah. So if you're under the age of 50, it's $5,500. If you're over, it's $6,500.
And those have no annual income caps or requirements?
No, they do.
They do. That's what you just talked about.
That's the $183,000. Okay.
So let's say I make $350,000 a year. Don't qualify. Does my wife, who happens to be self-employed, that doesn't, or am I getting into too many? Am I out of compliance right now?
We're getting into
borderline.
A few details.
Okay,
yeah.
So kids.
I hear that helicopter.
Kids, can you fund Roth IRAs for your kids?
It's one of those questions that is very.
I know.
You got a helicopter. Yeah, it's coming in, Dan.
Okay, I'm gonna set up an appointment with my guy Matt, and we're gonna talk about Dan Keller financial planning.
There you go.
Leave it there. You go. Doc, I knew I was gonna get in trouble. My producer's over there going, no.
What are you doing, Dan?
I'm sorry. I went rogue for a minute. I'm done.
You did. We talked about this.
I'm done. I know.
Jeez. All right. I know. I don't get excited about paying taxes. Yeah. I don't know really anyone that does. So if it's not too complex, can you describe other scenarios where people can get money into a Roth?
Sure, absolutely. Yeah. So one way is to, if you make too much, and this might tag along with your previous question, if a person makes too much to fund, say, a Roth IRA. Now, I'll make this disclosure. Restrictions for a traditional IRA and Roth IRA are different. So we're kind of heading down the road of Roth contributions. Okay. So for clarification for the listeners. So one way to get money into a Roth is through a Roth 401k. Now that might surprise some people because not too many people I feel like are aware of this option.
Yeah, I've only heard of a Roth IRA, not a Roth 401k.
Yeah, they're kind of a newer thing. I don't know when they really started becoming more popular. But depending on your specific company, they may offer not only a traditional version of the 401k, but also a Roth 401k. Okay. See, most companies that I come across offer a traditional pre-tax 401k. So the money doesn't get taxed prior to entering the 401k. If a person has a Roth 401k, the money gets taxed first, then goes into the Roth 401k. And so just like the Roth IRA, it's tax-free. Now that option's extremely nice, as I mentioned before, that for people who make too much to fund the Roth, because they're no longer subject to this $183,000 income.
Okay.
So I hope that wasn't too in-depth.
Great. That's good. That's good.
Okay.
That's really good info. So, actually, I'm hearing the outro music. We got to take a break, Matt.
Okay.
We're going to come back after the break. We got Matt Ross Financial Incorporated, coming back, talking about being a financial advisor, how he can help you set up your retirement. So stay tuned after the break.
Stay tuned. There's more Seattle Real Estate Radio coming up here on Business Radio 1300 KKOL. We're back with more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hello, and welcome back to Seattle Real Estate Radio. We are back here with Matt Ross, who is a financial advisor, and he's educating us on the things that he does to help clients with on a regular basis. So before we went to the break, Matt, kind of had to cut you off. I apologize, but
no worries.
Those traffic reports got to get out there somehow. You were in the middle of telling us about ways to get money into Roth accounts. Can you continue on with that before we get into additional questions?
Yeah, so we were just talking about putting money into Roth 401ks. The next option is the Roth conversion option. And before I jump into that, I've got a quick little disclosure that I need to read here.
Fun.
Right. So every investor situation is unique. You should consider your investment goals, risk tolerance, and time horizon before making any investment. Investing involves risk, and you may incur a profit or loss regardless of strategy selected. Unless certain criteria are met, Roth IRA owners must be 59 and a half or older to have held the IRA for 5 years before tax-free withdrawals are permitted. Additionally, each converted amount is subject to its own 5-year holding period. Investors should consult a tax advisor before deciding to do a conversion. Traditional IRA withdrawals are subject to income taxes and, if withdrawn prior to age 59 and a half, may also be subject to a 10% federal penalty. So,
compliance.
Yes. Yeah. So that being said,
yes.
the topic of Roth conversions, which I find a lot less people are even aware of this option, and it can be a little tricky, and your listeners can always reach out to me to get more clarification on this. So here goes. If someone makes too much money to fund a Roth IRA, what I will have an investor do is fund a regular traditional IRA.
Okay.
But they don't deduct the contribution from their taxes. Because again, if you make too much money, you don't qualify to deduct the contribution on your taxes. Instead, they make a non-deductible IRA contribution and then convert it to a Roth IRA. Now, again, like with so much of what we've talked about today, there's rules surrounding someone's needs to properly execute this type of a transaction. The kicker is this works best if they don't already have a traditional IRA.
Okay.
So is that about as clear as mud?
Totally as clear as mud.
As clear as it could be.
And that is why it pays to meet with you face to face and talk about specific things. So I'm not going, okay, well, does this apply to me? Does this not? And that's, again.
Well,
right.
And like you said in your disclaimer, your compliant disclosure, every investor's situation is different. That's why it's so important to sit down and talk with Matt, a professional like Matt. I mean, it's just...
it pays to hire professionals.
Yeah, and it's your future. It's your future. I'm excited because I actually get to ping a couple of questions off you now. Are you done, Christian? Are you done?
I'm finally done.
Are you done with the IRA?
Pass it off to you.
So we were talking, over the break and earlier about the simple or SEP versions. Would you explain that to our listeners? Because it's popping up a little bit more I guess in my line of work, when I'm talking with people, I'm like, go talk to Matt.
Yeah, well, these are other types of IRAs that I would say aren't as common, but they could be a good fit. Like a simple IRA, could be a good fit for one of my small business owners.
Okay.
I won't go into too much detail, but the company can set one up pretty quickly and allows for contributions up to $12,500 for somebody under the age of 50, and $15,500 for somebody 50 and over.
Okay.
Again, we get into more rules and limitations.
Okay.
And now a SEP IRA, I would most often suggest for somebody who's self-employed, quite oftentimes has no employees. And a good example would be somebody in real estate.
Okay.
Right?
Like me.
There you go. So I know you won't be surprised by this comment, but there's rules regarding all these types of contribution limits and what you can and can't do. I will just say that in the right situation, someone could contribute in a SEP IRA as much as $53,000 per year.
Nice.
So it allows a larger
Much
bucket.
larger.
Yeah.
So from $5,500 or potentially $6,500 for a Roth IRA, depending on
If
your
you're over
income,
50,
and if you're over or under 50, to $53,000
in a SEP IRA. Yeah.
Wow.
Yeah.
It's a big difference.
And the same income restrictions apply?
Everyone's different.
Everyone's
so
different.
Again, we leave the heavy lifting to the tax professionals to determine what makes sense for people.
Okay.
Quite oftentimes we'll throw out the idea with the caveat of consult your tax professional.
Yep. So what I love about you is you're working in unison with the tax professional, though. So essentially the client comes to talk with you, you give them, which kind of leads into my next question, Matt. So basically you help people determine or brainstorm with them the options that they have to put away money for retirement. That's essentially retirement planning. And then at some point in there, you're then reaching out and working alongside the tax professional.
Absolutely.
So talk to me and let our listeners know a little about how that looks. So client comes in, you're sitting down with them, you're brainstorming with them their unique situations, and planning for retirement. So explain that. What does planning for retirement mean?
Sure. Well, it's dialogue with them about their specific situation, but we want to make sure that we're being a little bit more detailed than just writing things out on a sheet of paper and saying, well, you look good or you don't look good. We actually use software to help us figure that out. So based on somebody's situation, what amount of money they need to accumulate in order to retire and maintain that same type of lifestyle they're accustomed to. This software allows us to take a number of different assumptions and do future calculations to determine, based on their goals, the likelihood of having a successful retirement, which for most people basically is not running out of money.
Mm-hmm.
That's a pretty good plan to have.
Yeah.
Right. That's never a good
You
scenario.
won't run out of gas in the mountains.
No,
Yeah.
that'd be bad.
Okay. So I guess that you kind of answered my other question, but how do you know? How do you know how much money someone will need? I mean, obviously it's probably a thorough process that we can't probably get too deep into right now, but is it just that you just relying upon that software? Elaborate on that. How do you know how much money somebody needs?
Yeah, well, for starters, I won't say it's just as arbitrary as picking a number. Quite oftentimes I'll have people come to me and say, well, I've heard you need to have this much.
Yeah.
And I say, well, based on what? Is it based on
exactly.
your scenario, your situation? What we do is we set goals based on what they want to accomplish, and we monitor our progress on a very regular basis. I think this is one area that sets my practice apart. It is the regular monitoring.
Yeah.
It's kind of like a GPS. Most people don't just plug in an address and expect that they're going to arrive exactly when it says that they're going to arrive. There's a lot of variables that people are going to deal with.
Makes sense.
Yeah, anytime I get to hang out with you, I love it. We had you actually come in and talk at one of our Wine and Wisdom events for my clients. I invited a lot of my my VIP clients to just come in and chat investment, retirement planning, and a lot of the, I don't want to say analogies, but how you talk so clean and clear and precise about financial planning. And so everybody's situation's different. I highly recommend that you on SeattleRealEstateRadio.com, you're going to be able to reach out to Matt and have that personal one-on-one conversation with him. I want to ask you, so would you say that once people get retired or once they retire, a lot of the hard work is over?
No, actually, on the contrary. Being retired brings its own set of challenges.
Okay.
We try to help people generate income the most cost-effective way with the least amount of tax implications, all the while trying to maintain the appropriate amount of risk in their portfolio. There's plenty of times where a client will call and request money from their account, and after I ask a series of questions, I might suggest pulling money from a different account or tapping into a different asset that they own. And being in contact with a client on a regular basis allows me to hopefully be prepared for the expenses that they'll have down the road. Most oftentimes, people are going to know when they need to, replace a vehicle or put a new roof on the house or take a vacation that they've always wanted to. And then once a client gets to the age of 70 and a half, the IRS requires investors start withdrawing money from their IRAs. And so, that withdrawal is called an RMD. So, we're not out of the woods once people, get to retirement.
Okay, so I've never heard of an RMD. Am I okay to ask you? Can you elaborate a little bit more on that?
Yeah, okay. Absolutely. So it's an accurate acronym.
We still need that acronym.
Right.
We've got a soundboard, and I really want one. So, we got to make that happen.
Yeah, so another acronym. RMD, it stands for Required Minimum Distribution. So when a client retires and they move their pre-tax company retirement plan to a pre-tax IRA, which is called a traditional IRA, they're then required at the age of 70 and a half to start taking distributions from it in an amount that the IRS determines. Now, I won't go into too much detail, but it allows the IRS to start receiving taxes on that money that a client has never paid taxes on. So we help them calculate how much that distribution will be, make sure they take it by the deadline, because an RMD not taken by the correct deadline can receive up to a 50% penalty. So that's something we want to make sure that people don't overlook.
Yeah. So, Dan, I know you got more questions, but I want to get some contact info out for Matt.
Yeah,
so if you've ever wondered if your 401k is invested to match your goals, how about if you're even on track for retirement? Well, Matt focuses his practice on helping individual investors and business owners such as you with planning for retirement. Matt consults his clients on a variety of topics, including IRAs, company retirement plans, insurance protection, estate planning considerations, wealth management, and many other topics. Most people seem to know what they would like their retirement to look like, but they're not quite sure how to make it a reality. If you have at least $100,000 of investable assets, Matt will meet with you for an hour at no cost. That's pretty damn nice, so thank you. He can be reached at his office at 425-357-0400. That's 425-357-0400, or through his website at rossfinancialinc.com. That's rossfinancialinc.com. Or you can always find him on Facebook, Twitter, or LinkedIn.
Yeah, one of the final questions I was going to ask you, which we kind of covered in that little debriefing, but you do a lot of other things for your clients, and Christian, you just hit on a lot of those. But in the last 30 to 45 seconds, anything you want to talk on in regards to other things that you do with and for your clients?
Sure. Yeah. I feel like we need to watch out not only for clients' investments, but also helping them with their nest egg. So we consult on how much life insurance they need, pay attention to their debts, give them guidance on paying things off. Cool. Sometimes they've got kids that need help with certain types of accounts. So it's really a holistic approach.
Perfect. Well, thank you, Matt. We got to take a quick break. Stay tuned for more Seattle Real Estate Radio.
Stay tuned. There's more Seattle Real Estate Radio coming up here on Business Radio 1300 KKOL. We're back with more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hello, and welcome back to Seattle Real Estate Radio here on KKOL 1300 AM. Man, I learned a lot from Matt. Yeah. I learned the biggest takeaway I had from him. Yeah. I know we always like to do takeaways right after we have a guest on.
Yeah.
It's complicated, man. Yeah. There's so many freaking rules, and IRS stuff,
Yeah.
and it's always changing, and I don't know why you wouldn't hire someone that's a professional in that situation. That's just my opinion, because I don't have the time to stay on top of all that stuff, and I don't want to.
No, and we can't, Christian. And anybody listening, for example, if you work at Amazon and you have a job to do, and that's working for Amazon. It's a full-time job to manage your mortgage and to manage your real estate and to manage your taxes and to manage your financial plan and your retirement plan and all this stuff. That's why it's so important to lean on a professional. If let's say that I was not in this industry, man, just knowing what I know or knowing a guy like you or a guy like me that has Seattle Real Estate Radio, and we've created this circle that mirrors a wheel and all these spokes attached to this hub, being able to be connected to guys like you and I would be a huge resource. So what I want to encourage anybody who's watching this or listening to this, when you come across guys and gals like you and I and Matt and a lot of our guests that we've had, hitch yourself to their hip, man, and you need them. You need them by your side. I get clients all the time. I know you do too. And just recently, I can tell you, and he's got an appointment with them. A past client of mine calls me, Dan. We're looking to sell our investment home. Don't know what, and they've got about $120,000, $130,000 in equity. Don't know what we should do. Should we sell it? Should we continue renting? Should we refi? Leaning more towards selling. And they wanted to know what to do with the money to avoid paying taxes.
Got it.
Okay, so I sit there and I get this email, and I'm like, I know what I would tell her. You're going to have to pay taxes, sweetheart.
Yeah.
It's capital gains.
Unless
you're
a lot of things. Turning it into another property.
Exactly.
Doing a 1031 exchange.
Exactly. And so here's what I do. I copy-paste the email. Email it to Matt. Hey, Matt, what are your thoughts? He writes a disclaimer. He gives his feedback. Another disclaimer at the end that basically says, great question, here's my answer, but this isn't 100% financial planning. This is CPA.
Yeah.
So then he's able to meet with them, give them financial planning advice, and then also give them tax advice. Because ultimately the question is, how do I avoid paying taxes? And so with those options, like you said, either rolling it in, doing this, they've got 3 or 4 options now. So I think it's just huge. Matt's a huge resource. Don't mess with your retirement. Don't mess with your future.
It's not something to guess on.
No. And with the internet nowadays, listen, everybody thinks they're a pro. I saw a meme on Facebook the other day, and it was a sign. And I'm actually going to get it and make one myself and put it up in my office. And it was a physician. And he said, "Don't mistake my medical degree for something you found on the internet." and literally, it was a poster in this doctor's office. It's everybody. We've got access to all this info. That's why you go to the doctor.
Exactly.
That's why you go to Matt, a financial planner. That's why you go to you versus an online realtor. Or not even, there are no online realtors, online real estate agents or brokers. That's why you go and you make sure that you're working with a pro. So huge segment. If you're listening, that's my biggest takeaway. This is too important to mess with trying to do it on your own.
Exactly. And I kind of wish we would have had him on before tax day.
Yeah.
Because
he couldn't have. He was too busy.
He was slammed. I know.
Yeah,
but that would have been helpful because there's a lot of things that you can do to prepare yourself for the previous tax year.
Yeah.
You can still do it up to the tax filing date.
Yeah, we'll get him on. Huge. We'll get him on next year. And I didn't know this, but we started talking about 3 months ago. This show took over 3 months in planning today.
Exactly.
And what Matt was telling me,
that went into it.
Yeah, he's so busy during tax season, their busiest time of the year, and I was like, wow, I never knew that.
Yeah.
And then when we started talking more and more about, how he partners with CPAs, I'm like, holy cow, it's huge.
Well, and the thing that separates him is he will partner with CPAs. And CPAs, tax time, they are slammed.
Yeah.
They are trying to just get through all their clients and helping them out.
Yep.
They're not being creative necessarily.
Yeah.
They're not going next level and trying to figure out how they can help their clients out. And that's where having Matt on board to go, hey, you should ask your CPA about XYZ because you can save some money if you're able to do this.
Yeah.
That's a big deal.
Yeah. It's like you've talked about this before with real estate investing, Christian. Start with the end in mind.
Exactly.
That's what he's going to do. He's going to work backwards from there.
Yep.
He's going to tell you what you need to invest. He's going to tell you what you need to do.
Thing.
So,
all right.
Yep.
Welcome to this week's Mortgage Minute with Dan Keller.
Hey, well, good afternoon. My name is Dan Keller. I am a mortgage advisor at New American Funding. I'm also the co-host of Seattle Real Estate Radio. I also am going to give you my MLO number. Running out of air. It's MLO number 115349. That means I'm legit.
Niner.
And in compliance. And you always want to say niner. You always want to add this.
I do.
Trucker. Like a trucker?
Let's think of
115349er.
Niner.
Gosh.
Anyways. All right. So what's going on?
You know, it's not necessarily what's going on, it's what went on. Let's talk about that this week for the Mortgage Minute, and it may take 2 minutes, but this is important. Mm-hmm. So from a financing standpoint, I get a call from you.
Yep.
This is about a month ago. I'd say about a month ago, 3 weeks ago, a month ago. Client wants to put an offer, a client of yours wants to put an offer on a condo. You're a little bit worried because you're always looking out for your client's best interest. Mm-hmm. The previous offer had fallen through because the condo association was under previous litigation, and the previous lender client who had an offer on that home, it had fallen through in financing and been declined.
Yep. So the house was under contract, came back because the condo association was under litigation. Mm-hmm. That bank, which was a big bank, would they would not fund the loan because of the litigation. That's where Dan came in on his high horse and saved the day.
Yeah, that's how we make it look. The reality of it is it was really ugly and it was time-consuming. And Bree Seidner, my production manager,
shout out to Bree,
runs the back end of my business.
Insanely,
one of the smartest women, one of the smartest people in the mortgage industry I've ever met, and I'm blessed to have her on my team.
She is awesome
with me.
Yes,
Bree literally took this and ran with it, but we made it look good. Mm-hmm. The reality of it is the condo association, the condo was not financeable. Mm-hmm. One of the reasons why I work at New American Funding, and I could work at any bank.
And you get pitched from every
bank
all the
time. Both of us do.
Yeah.
And one of the reasons why I love New American Funding is we have our own condo department. So we worked in unison with you, with the listing agent, with the HOA, with the borrower, and took all that information, the lawyer even, the attorney.
Yep.
And
that was doing the litigation.
Took it to our condo department, remedied the situation to make the condo financeable, and closed in less than 20 days.
And then the next week,
and you throw another one at me.
I gave you another one.
And I don't need to say this again.
And
but
you took care of it again.
We hit that one out of the park too.
Yeah.
So that's kind of my again, it's a crazy market. Seattle is condo townhome heavy.
Yeah.
Make sure you're working with a pro.
Exactly. All right.
Welcome to this week's Seattle Real Estate Minute with Christian Nossum.
Boom, back to back.
I know.
Back to back homers.
Boom. So this week, I'm just going to make it quick one, actually a minute. Make sure when you're hiring a real estate agent to represent you to sell your house that they're hiring a professional photographer. I'm seeing more and more because the market's hot.
Yep.
They think that they can get away with posting crappy photos that are low resolution, not very well staged. You think that you could just put a for sale sign in the front yard and the house is going to sell. That might be true. You might be able to sell your house without doing all the necessary steps that I would personally do or recommend. But I guarantee you're not going to get as much money. So if money is important to you when you're selling your house, make sure you hire a pro that's actually going to invest their money. That's what I do. Invest their money into marketing your home correctly, making sure that it looks amazing in photos, amazing in an HD video, not a slideshow of photos, but an actual video so people can understand how the space is actually laid out. It makes a huge, huge difference, and it increases your profit when you go to sell.
Well, you mentioned before the show, man, that people can, you can be careful who you hire. Make sure that you're working with a professional that can get you the most for your sale, and that plays a role.
And again, you can put it for the market's so tight, you can just put a sign out there with some crappy photos, and you're probably going to sell it. But I guarantee you could sell for a whole lot more if you do it right.
Leaving cash on the table.
You're leaving cash on the table. Well, that ends our show. Thank you, everybody, for listening, for watching. Stay tuned next week. Seattle Real Estate Radio. That's it. Thank you.
To contact the show or for more information, visit SeattleRealEstateRadio.com. That's SeattleRealEstateRadio.com. And be sure to tune in again next Monday at 3 for more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller, right here on Business Radio 1300 KKOL.